Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for the day. It's Tuesday, second day of the week. Hope it's going well for you so far. Before we get started, can you please give me a like, a subscribe, a follow if you're on Facebook, and because that really helps me out. And I would really appreciate it. So thank you. Now that you've done that, without further ado, let's get into the charts. All right, so what are we seeing since yesterday? Well, came down. Yep, came down. Well, it came up first, but then it came down. So yeah, where were we talking about yesterday? We were right around 17, around there. So we were here-ish. Since then, we did come out of the bull flag pattern here. Can adjust it up a little bit now. That's our new top of the range. And got rejected off of 85. Where am I? One sec. There they are. Bring those back. Let's get rid of some of them. Let's just get rid of a few of these that are clouding up the daily there. We'll leave those ones. All right. Well, actually, we'll leave 68. There we go. All right. Sorry about that. All right, back to it. So we're still in this bull flag, and we will still be in this bull flag as the downward edge of that, or the downward support of that bull flag is there. Now let's draw a simple little fib retracement from the top to the bottom just to see where we're at. We are currently in the golden pocket of the fib retracement. This is a likely spot where we reverse from. Now, if we do see a reverse from here, that'd be great, because then we would maintain this ascending triangle pattern. Yeah, we came down out of it a little bit, but we can... Whoops, not that one. That's not what I want. I want you. We can move that down a little bit, adjust this ascending triangle. I would kind of put it... I would put the breakout point way out here. So, I mean, if it can maintain positioning in there, then great. But having already fallen out of it, out of the original one there, well, kind of... Here, we'll do it this way. We'll do it this way. We'll make a copy. Oh, I don't want both of them. I just want the one. Back. 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 There we go. Just want you. I want you to copy. I want to take you. I want to move you out. Now, after I move you out, I want to take this one. I want to make you red. Why do you want to be red? Well, because you got broken under. So you're no longer a support line or a pattern line. You are now a resistance line. So yeah, the ascending triangle there is looking pretty long. So yeah, I mean, if we can stay within that pattern until the 24th of this month, then I guess we still got another chance to break out. However, if we break down out of it again, then hey man, expect that bear flag to play out. Maybe it won't play all the way out to 68,808. Maybe it'll stop here at 77. That's the hopefulness if the breakout to the downside does occur. Again, we do have this Bollinger Band squeeze occurring here on the 6-hour chart. That does tell us that a breakout is coming. We're seeing volatility increase. It's currently at around 30. And we are seeing the Stokes pointing to the downside and RSI moving to the downside, coming in lower than its previous lows. So yeah, man, it looks like this bear flag might actually hit. How far down though? Well, maybe not the bear flag, but how far down? Well, hopefully it stops here at 77, but you know that the measured move of the bear flag takes us all the way down to 68,808, like I just said. It's a sad, sad thing, but it is what it is. Hopefully this bull flag can reverse it and bring us back to the upside, but at the moment, things aren't looking too good. We are still seeing this bullish div here on the daily, though, so possibly, maybe, that can drive us to the upside. The Stokes are now in oversold territory here on the 6-hour chart as well. And they're very oversold here on the 90-minute chart as well. So a reversal is possible from here. Very much so. In fact, is this still... Are these... Oh, let me delete that. See what this looks like. It's still technically over it. There's kind of a bearish div here as well. Still, it's different because now we're seeing these kind of like flat lows here while we're seeing lower lows still between this point and this point. So that's a divergence as well. We are seeing the Stokes at 0 and 0, which could mean that they're just going to stay stuck down there. So let's look at the 22 real quick. Well, the 22 Stokes are up high. The RSI is over its signal again, but it's still in bearish territory, and the Stokes might get into overbought before it can pull out of here. We're going to need to see a V-shaped recovery. Otherwise, we're looking at another bear flag forming down here. Let's look at the 5. You can see the bear flag here on the 5-minute pretty easily. We'll just draw it out real quick, especially with those Stokes being oversold too. Looks like they might get stuck though, and this could turn into a V-shaped recovery. We got to watch out, but this could turn into a V-shaped recovery on the 5. If it does, and it gets back over to the 200 of the 5, well, that'd be great. Bring it back up to like 83, but that wouldn't really take us out of that pattern. It would get us a start to maybe pull into the upside, but darn, man, things aren't looking too great. 100 on the Stokes, 100 on the Stokes on the 1 minute, and the RSI is looking strong. Let's see if we can break back up over 82 in the next like hour. If we can, then hey, maybe there's a chance for the reversal. If not, we're looking for this dump, man. Let's take a quick C. Measured move C. 80,705 would be the move on the 1 minute if it dumped, or the 5 minute if that dumped. I'm gonna delete them because they're just gonna get in the way on the higher time frames. Let's go back to the 90. So these lower time frames say there's a chance for a reversal, but they are the lower time frames, so they might not actually hit there. So we're watching. Hopefully that reversal hits, but if not, then we're looking as far down as 77 today or tonight. And if 77 can't hold, well, that bear flag's looking mighty likely. Where did it going? Down into the 60s. Ouch. And if that happens, well, then we'd be invalidating this this bull flag on the daily. And we could probably say the bull run is over at that point. Maybe. More likely. It's more likely that the bull run will be over at that point. And then it's like, hey, man, sit on your hands, wait a year, and then start DCAing again. But again, there's a chance. There's a chance. There's a chance. Let's keep an eye on that. Oops, not there. Let's move this one to the 22. This is what I would keep an eye on for the next few hours just to see how this one plays out. If the 22 can get back to the 21, it's very far away from the 21. Can get back to that 21, over it, and back to its 200. Up here, it's 83.7 or 83.5. Break over that, and yeah, we could maybe see something, but darn it, it's under the 200. And it's under the 200, and it's at the 200 here on the 1 minute. So let's see if it gets rejected right here. Watch the 1 minute. If it gets rejected, 5 minute might dump. If the 5 minute dumps down to 80, well, 22 is getting far from that. Even further, that bear, man. I don't like it, man. I don't like it. It needs a reversal from here. This is a key level. If you can't find a reversal here, well, then we're heading back to 80. Hopefully we can find a bottom there. But otherwise, man, things aren't looking too good. Ah, boy. Oh, boy. Oh, boy. All right. Well, thank you guys for watching. Music courteously provided by Luminous, Sex, Squatch, and Belowa. You guys are awesome. Much love. See ya. Later.